And of course, now the website's slow because I'm on 15 different things live streaming and Skype. All right. All right, folks. I lost someone off the app. Don't leave. I'm just getting started. I'm letting everyone know we're here. Tough crowd here, Barry. Tough crowd. Tough crowd, anybody on the conference call. Thanks for tuning in. All right, let's get going. 7 minutes late. Woo! Now I'm all stressed out because I couldn't figure out how to log into the dang live stream here. But it looks like we're going. All right. Let's start like always. Let's just run over to Market Watch and talk a little bit about news. You know, we'll do this. There we go. Market's up 140. The headline on Market Watch, surprisingly, is not about the POTUS State of the Union, but looks like it's about the Fed. Does anybody even care about the Fed anymore? It's actually sort of an interesting topic. Has the Fed lost all relevance because it has painted itself into this ever low interest rates and quantitative easing, and it's beholden to the stock market and enabling giant corporations to borrow money at ever lower rates, enabling banks to borrow money at 0% and lend it to you at home at 6, 18, 27. Ever looked up the word usury? That was a clue on Jeopardy the other night. I missed it. I didn't think fast enough. I was like, wait, what is it? Hate that. Played that HQ game, trivia game a couple of times, and I get distracted on like the fourth question, and then when I look back down, I've missed. I'm going to try to get through that game at least once. It seems fun. Speaking of the app revolution, which is what we are always talking about here on the I Am Cody Willard, the Trading with Cody, the Revolution Investing, the Cody Underground. I need to consolidate my brands because Cody TV, it's all Cody. Maybe I should just lose the Willard. Be like Madonna, Cody. All right. What do you want me to talk about? Anybody on the call, on the conference call here? Here, let me hit record so we can turn this into a podcast too. Welcome to Cody Underground, the podcast. I'm doing a live Q&A here with my Trading with Cody subscribers. Anybody on the conference call or on the app live streaming here, I've got an interactive live streaming feature on the I Am Cody Willard app. Download it for iOS or Android. On the call first, I give you guys first bidding here. Barry or anyone else who I heard dial in.
If that's okay.
A question that's pure speculation. Love it. Let's hear it.
Do you see Apple, when autonomous vehicles become ubiquitous, becoming like Uber, because they can just put an app on their phone and there'd be no loyalty to Uber, and then you get in and everything syncs? Do you think that's a market to enter?
That's an interesting thing
because I mean, there's no, you have to pay drivers. You know, now the only thing preventing other people from competing with Uber and Lyft are drivers, so when self-driving cars.
So yeah, I get it's an interesting concept. You're getting at two different things and both somewhat speculative. I mean, one's definitely going to happen. The driverless car revolution is happening. The idea that people, especially when you're hailing a ride, there will still be people who drive for joy, of course, but in 10, 20 years, I think 90% of our travel will be on some sort of a driverless vehicle. I mean, probably 80% of our travel is routine anyway. So that your routine travel, you'll probably end up in some sort of driverless car. So it's going to be a huge market share. So the question sort of then from there becomes specific to Apple, and that's where we get speculative, is because you're looking out 5 or 10 years and wondering if Apple will invest in putting a bunch of driverless cars on the road, and especially in major cities, and becoming Uber, displacing Uber. I don't think so, frankly, and here's why. Uber and Lyft. Shout out to Lyft. I've got a great call with them next week with their driverless people, actually, talking about their driverless dashboard entertainment. I met with them when we were at CES, when I was there with Neil. We did a driverless ride in a Lyft car. So Uber and Lyft are funded to the tune of billions and have probably access to tens of billions of dollars in coming years. And they know that that's their future, and they're investing in this thing tremendously, and they've partnered with all the major car vendors already. And Apple, I've always been, if you followed me for 5 or 10 years, or 15 years, but however long I've been writing in public, maybe. But my point being, maybe for the last 5 or 6 years, people have been talking about Apple doing driverless. And I've been real skeptical about that. I never thought they would release a driverless car anytime soon. I think they are interested in being a platform inside of driverless cars. But another company I met with that's active, which partnered with Lyft and their driverless cars. And what they're doing already is amazing, and they have invested a lot of money. And to catch up with these companies that are racing to driverless, Apple's way behind. So let's put it this way, it would take an acquisition of someone serious, and you're talking an acquisition that's 10 times bigger than anyone that Apple's ever done, Beats being the biggest acquisition that Apple's ever done. And if there's just no, Apple would, again, okay, so Apple could spend $20 billion and buy a driverless car platform company. And that would just be 10% of their cash, of Apple's cash. So it could happen. It would take an acquisition, I would think. And I don't know that I don't know that whoever's going to be guiding. No, just finish this. I don't know whoever is going to be guiding Apple is going to have the guts to do that.
Right.
I mean, Tim Cook's been a manager, and before him, Steve Jobs was, of course, a trailblazer, but in between the time that Steve Jobs was CEO originally and after he got fired, there were several CEOs that came through Apple too that just were scared, and they're not aggressive thinkers. And so it would shock me, frankly. I don't think Apple's going to be big into autonomous vehicles anytime in the next 5 or 10 years. What were you about to say? Last question or point that you had? Was that it? I thought I was going to let you say one more thing.
Oh, yeah. Hey, Cody, this is Derek. I'm a new subscriber.
Welcome. Thanks for joining Trading with Cody. Go to tradingwithcody.com and join if you have not. What do you got, my friend?
I think it's trading me. So I made my first purchase with you on Cadix. It's up over 5% in a week or two. Do you still like it up here? And why is it up so much?
Okay. Now, number one, I'm about to talk about a small cap stock, and it's only so far been talked about for Trading with Cody subscribers from me. And sometimes when I talk about this stuff in public, the stock can move. And I don't know that anybody listening actually heard the name of the company that you said. So I'm going to leave that be. If you're a Trading with Cody subscribers, you know probably what he just said. And if you didn't, you can email me and I'll tell you the stock we're talking about now. But I'm not going to just throw it out there in public because it is a brand new thing for Trading with Cody subscribers. And I am going to publish this on YouTube after we finish talking. I'm not doing it live on YouTube right now. So with all that as a caveat and precursor, the company you're asking about just signed an agreement with Verizon. They are a supplier to telecom companies, a fiber optic supplier to telecom companies, a passive optical network fiber optic supplier to telecom companies. And all that to say that, look, so when you sign a company with North America's largest telecom company, Verizon, and the potential is there for it to become this is again a small cap company that's doing a few $100 million in sales right now. There's the potential for this thing to do 10 times that if Verizon actually implements and distributes this passive optical network that this company is supplying into the Verizon networks. Now, it helps 5G is the reason they're doing that. And so Verizon's going to spend 10 or $20 billion investing in 5G in coming years. So absolutely, you want to capture, as I like to say, there's $5 or $10 billion of cash flowing into 5G spending infrastructure from Verizon alone. And the company I'm talking about is putting their bucket out in front of that spending, and that's a good thing. And the thing so the stock popped a little bit on that news. The reason why it didn't pop more than a few percent, 5-10% from where we started buying it last week, when this Verizon news was announced this week, the reason it didn't pop more is simply because we don't know how much Verizon's going to put it and build on this company's products. We just know that they're doing a trial and that they're implementing it, and that's a very good sign that Verizon is going to be using this company's products. So that's why the stock is up a little bit. And then to your next question, look, almost all of my Revolution investing, my trading with Cody approach to companies like this is longer term. I'm not trying to capture 5 or 10% move. You know, I've got stocks that were up 10,000% on, 600% on in the last 2 years on Nvidia. And, you know, if I had worried about the first 5% or 10% move after I bought it, or tried to sell it or been scared to buy more or something, you know, I mean, you miss the 600%, you miss the 1,000% move. So you got to be patient. We're not in here for a 5 or 10% move. And the other thing I would say about that is this is why I like to spread my purchases out over tranches. I don't like to buy everything all at once and throw in all of I like to spread it out over time and over price. And sometimes that means paying up a little bit on the second or third tranche. And sometimes I get to buy more lower after I've bought some. And, you know, so yeah, I might buy some more of this company, do another small tranche in the next week or two, wherever it's at. Because if it works, it could be a 5 or 10 bagger. And if it doesn't work, I think it could be down 30, 40, 50% from right here in the next year or two. This one, unlike most of our investments, is a small cap, and it is a binary outcome so it's either going to go up a whole bunch or it'll drop quite a bit. And most of our stocks are not quite that extreme. I mean, most of, Apple, Amazon, Facebook, Google, everything's a risk, right? But I don't think most of those had that kind of, it's not like they were going to go bankrupt or something. And frankly, this company could. They've put all their eggs in this basket. And if Verizon and other carriers don't start buying this company's products and really investing and growing spending on them, who knows what happens. It's a small cap company. It's dependent on one product, unlike most of our investments.
Thank you, Cody.
Thank you. And thanks for joining. Let's see if anybody on the app has a question. Partner in crime.
Hey there.
Hello, sir.
Got a
How
question
may I help
for
you?
Cody. All right.
Yes, I'd
I
love
have
to hear it.
$10,000 and I was going to invest it in a single stock today. What would that company be?
I got to get more information from you. You've got 63 seconds left in your question, so you're
Okay.
gonna have to, I'm gonna have to ask quick. You're gonna answer quick. Do we have a whole bunch of money elsewhere in stocks already,
Yes.
and or in mutual funds already? Okay, so it's not like this is your one bet.
It
This
is
isn't
not the
your
nut.
or something that you've been waiting to invest. Because the answer to that would be to spread it out over a few. I wouldn't pick just one. Um, the the $10,000 in one stock right now. Why do you got to put me on one? What I hate choosing one. Number one, so I'm going to have to go with three, even though if you want just one, because oh, what the heck, I'll do it. Let's just look at the portfolio real quick and let me think about it.
Yeah.
What, two words for you?
You're crazy about the
Bitcoin.
cryptocurrency.
Kidding. Don't. It's a frenzy out there. I don't suggest buying Bitcoin right now. One stock right now, I might go with Verizon, honestly. And or Intel. These are both companies that I've purchased recently in the last few months. Intel, what do you guys think? Maybe 8 months, 9 months ago, it was at $33, maybe. It's up to 45 or higher. I didn't look at it the last few days. But it came back. It got hit recently for some silly, well, not silly stuff, but as you guys probably saw those headlines, they had all kinds of hacker issues, and the stock got hit for 10 or 15%. And as we talked about on Trading with Cody several times and answering these questions, I didn't think it was a big deal. I didn't think we would even remember that headline in 2 years, and the stock's come back since then. Regardless, look, I like Intel. I think the company could double or triple from here. You've got a good dividend. It was 4% when we first bought it, but because the stock's gone up and the dividend hasn't been raised yet being the operative word, the dividend's lower than that right now. I do think Verizon is also fantastic. I think it could double or triple in the next 5 years, and that would surprise everyone. Verizon hasn't made a big move like that in years, and but I think 5G is going to be a driver for Verizon, and in the meantime, they generate a ton of cash, and you've got a nice dividend, 4% plus. The stock also is up since I first bought it, a little bit, but those are two. Those would be two that I would like for the next 3 to 5 years. And if you want to be crazy and and risk that money, the one stock that we were just talking about that's available on tradingwithcody.com exclusively, because I don't want to throw it out there. It's also actually a Revolution Investing Market Watch. I put that in the portfolio there this week, that same stock, or last week. That one. And Mike, I'll talk to you about that one later, and or you guys can email me at support@tradingwithcody.com, and we'll resend you the trade alert from last week, which mentions this company that supplies Verizon, which could go up 5 or 10-fold in the next 3 to 5 years. And it also could go close to zero, frankly, but I would hopefully have sold it long before it got to that point. You'll know in the next 6 or 9 months if this company that is supplying Verizon is winning. And if it's not, then I'll probably have moved on. And if, maybe I got a 30 or 40% downside. Never, who the hell knows? Stocks can crash. You never know. Questions on the conference call and or here on the app? If you're on the call and you want to ask something, or if you're on the app, I'm inviting fans to tap. The way this interactivity works on the app. Go ahead if you got a question. I'll talk about the interactive in a second. Yes, sir.
What are the catalysts behind the streets movement? What do you see in that?
The recent hit that the stock took, or the pop that it has taken since that we bought it?
I'm not worried about that. I'm just wondering what drives it. I don't know much about it. I know it's like Jim Cramer's company. I don't know if he founded it, but I'm just wondering what you see going forward and what's going to drive that stock and how do they make money?
Okay, now this is another small cap that I don't want to pop for no reason. So if you're watching this, don't rush out and buy the stock and all that stuff. And we've owned it since it was below $1. So we're up quite a bit on it already. I'm not selling any of it yet, but we are talking about TST, thestreet.com, which, yes, is Jim Cramer's company. And the reason I own the stock is they brought on new management, the new CEO, new chairman in the last year and a half. David Calloway, the CEO, Larry Kramer, the chairman. I've known both of them for 15 plus years. David is a friend of mine. Well, Larry too, but I don't know Larry nearly as well as I know David. I've hung out with David off and on at money shows in New York. I've had scotch with him and with both Larry and David and the, what's that old one of those bars there on Wall Street. It's fun, good stuff. And I love David. I believe in him. I believe he's got that people that work for him like to work for him, and I think he can come in and that company. And so then to further that, so look, the company does $60+ million a year in sales, and the market cap when we bought it was below 30 million dollars or so. So I was trading at halftime sales. The company was burning a little bit of cash, but just any growth, any margin expansion, any tweaking of their costs would kick off potentially millions of dollars of cash. And on top, and then further, the company had $30 million in cash when we bought it. So I was basically getting it for free. Getting it. The stock market was saying the company's never going to create any value. And it was trading below the value of the cash, or at the cash. And so when I bought Apple, by the way, back in March 2003, the first time, it also was trading at or below its cash balance, which is a crazy thing to think about. That's when it was split adjusted at $1 a share, and they had like $1.20 per share in cash. At the time, it was actually like a $14 stock, and it was trading at $12, something like that. But at any rate, I'm off topic. I'm talking about Apple. I was buying the street for almost free at that point. If David could come in and create, and Larry could come in and create any value, stock would pop. If there's any million, if they generate $5 or $10 million of cash, you throw a 10 multiple on that. Company can have $100 million market cap plus cash, 25 million. That'd be, a 4 or 5 time potential pop from where we originally bought it. And now it's up probably 30 or 40% since then. Biggest reason why it's up since then is, yes, they've generated some cash. David's got that business turned around and I hope growing. And on top of that, they had a convertible shareholder who had they had to pay him $50 million or something before they could sell the company. So they would never have been able to even potentially look at selling the company without being able to write a $55 million check on top of buying it, the company, the equity. So at any rate, that was taken care of. That convertible was bought out. And so, there's hopefully some clear sailing here. I wouldn't rush out and buy the stock, but I do believe that David's got this company turned and there's some upside if it works out. It's a small cap and very risky. Any penny stock, any stock trading at $1 is, and I mean, clearly something's not right. Shouldn't be trading at $1 if it's publicly traded. And I mean, heck, the street.com had a multi-billion-dollar market cap back at the top of the .com frenzy. If you own cryptocurrencies right now, just remember, there were a lot of great companies that even survived the .com frenzy that ended up losing 99% of their value, from JDS Uniphase to the street.com. And they're still around, not to mention all of the frauds and frenzy that was going on in the .com era. And there are direct parallels to the frenzy and bubble that is cryptocurrency right now. Doesn't mean that there won't be cryptocurrencies and blockchain futures in the future. And now I'm off topic again. If the street.com changed their name to the street.blockchain, the stock might go up like 500% tomorrow because we're in a frenzy. All right. Did I answer your question?
Yeah.
Wonderful. Any other questions on the conference call and or here on the app? Another partner in crime here. Hi, sir. How may I help you?
Hi, Mr. Willard. How are you?
I got all nervous.
How are
I
you?
dropped the phone. It's Ross the boss. Oh my
I can
God.
tell what's
Oh my
going.
God.
It's not good. Hey, I have a question. You mentioned Verizon a while back, and the stocks really hasn't done much. What should I keep it or should I sell it? What should I do?
That's what I'm saying. I like Verizon. I think it's a screaming buy right now, frankly. I think 5G changes the trajectory of that company. If you've ever heard that phrase before, Ross, changing the trajectory of their company. But that's what they're planning
I
to
know
do.
I know the voice revolution one, but I never heard that before.
That is, and frankly, that's part of it, right? So the voice revolution entails being able to talk to devices everywhere all the time. You're constantly connected. And if you're going to be having, if you're going to be having, let's try proper grammar here. If people are going to have constant broadband devices and not just their phone and not just their computer and not just their TV, but everywhere you go, you got your glasses connected, you got Internet of Things, your refrigerator, you're watching the IM app inside of your toilet. I mean, we got revolutions going everywhere, man. And 5G drives that. And Verizon is the leader of 5G in North America. They're investing much more than anyone else in it. I think it's going to pay huge dividends for Verizon shareholders over the next 3 to 5 years, including in the form of direct, actual, literal dividends. But beyond that, also capital growth, stock growth. I hope. Could be wrong. Maybe someone comes in. Maybe it gets nationalized. What a crap. I'm going to tell you right now. There is 0% chance that anyone in the Republican or Democrat regime, either side, is ever going to nationalize the 5G network in this country. These guys are owned by giant corporations like Verizon and AT&T. They're not going to do anything that Verizon and AT&T doesn't want them to do. So you don't need to worry about nationalization of 5G. Okay? Let's just take that off the table. It's ridiculous. Not going to happen in this world. Any questions on the call? Endor here on the chat. I've got questions from the chat room that I should probably get to. Hi, Cody. I hope you and your family are doing well. Read your trade alert yesterday. I bought some puts yesterday. About what percentage of your total capital investment approximately, I like that there's about an approximate because I really don't like to drill down to that type of fine line stuff, but he's asking what type of your total investment capital approximately are you using to buy puts? I'm guessing only 1 or 2%. Thanks for offering a lifetime subscription. Go to tradingwithcody.com. Save a bunch of money if you get on my lifetime subscription. And those of you who are already trading with Cody trading with Cody subscribers, what are you doing? Get on it. Started offering that 2 days and the slots are going fast. You better sign up soon. It's a limited offer. Anyway, you've been an excellent stock picker. Well, thank you. Take care, Ray. Thank you, Ray. Look, you're about right. Even less than 1%, frankly. I'm just getting started and doing a little bit of hedging. There are times I might own 1 or 2%, but as I noted in that trade alert yesterday, I'm just putting in a little bit of extra hedging and giving some potential, like gain some alpha that potentially if the market were to crash outright. Not that I expect that, but if you had a good 5 or 10% pullbacks, these puts could, kick in. If you put 0.5% in some puts slightly below the market that in two of the indexes or something like I did yesterday, and the indexes were to crash 5 or 10%, yeah, you could get a 300, 500% pop on those puts. And, that'd be 2 or 3% that would then kick in because obviously your long stocks would be getting hurt in that hit with the market pulling back. So your overall portfolio would probably be down anyway, but that's all right. I'm not trying to game every nuance and every curve in the markets. Going back to your question, less than 1% right now. Um, Cody, the new tax law requires FIFO, first in, first out, accounting for shares sold. This could create large tax liability if you're trading around a core position. Is there a way to solve this problem? And then there was a whole debate. This question was actually in the chat room this morning. And then there was a whole debate from among CPAs and other people in the industry debating whether the law actually passed with the FIFO accounting shares and all of this stuff. And the answer to your question is, look, that's not my specialty. I'm not an accountant. I don't want to be an accountant. I'm, I do try to avoid I try to minimize my taxes like anyone else, but I don't let taxes wag the dog. Don't let the taxes wag the dog. So I'm not worried about FIFO and all of that. Doesn't change my playbook, and I don't think you could game what it might mean for the stock market, or if you were to try, although that's not even your question. But hi, Cody. Question for today. I noticed after reading a few articles on Aptiv, formerly, I already mentioned Aptiv, right? That some mentioned LEA as a competitor. Did you see LEA at the Vegas show? I didn't see LEA at the Vegas show, and I don't know anything about them. This guy goes on to mention that, that LEA has a similar dividend yield to Aptiv, although the PE is at a 40% discount to Aptiv. Now, that hits on a topic there that we should probably just hit on a little bit there of what we're doing when we're going to try to invest in driverless revolution. And I've got a book coming out called The Driverless Revolution or something thereabout, and I'm going to have some stock picks in it. And I'm doing a bunch of research. I'm meeting with these companies right now, and Aptiv is one of them. And I think the thing is that valuation is probably not going to be the biggest factor. I'm going to buy the one that's going to be the Amazon. There are going to be 3 or 4 outrageous winners that dominate driverless cars, but there will be suppliers into it that grow with this industry. And so if we can find a company that's truly going to drive the driverless revolution, pun not intended, we will, but it wasn't a bad pun. I think we'll buy them. Valuation is important, but it's not everything, especially when there's a revolution to the size of trillions of dollars that's burgeoning, as there is in driverless right now. See if anybody else here wants to jump in. See if I'm even recording this. Yes. Podcast intact. Let's see here. Any other questions from the people on the phone or on the app? Got a couple more here in the chat room.
Hey, Cody, this is Steve. And I was just curious what your thoughts are on the solar power industry in the U.S. going forward here.
Okay, so if you're a longtime Trading with Cody subscriber, Steve, which I think I recognize your username, been around for a while.
Yes.
I own First Solar and Solar Edge, and we've got some terrific gains. Solar Edge was our second or third best performing stock last year. That's saying something because we had a hell of a year. First Solar also was doubled, tripled from its lows of last year, and now trading above $70. So look, again, I think your question has somewhat to do with subsidies from the Republican Democrat regime that they shower of. Instead of helping poor, hungry children, they send it to First Solar and Solar Edge and us shareholders. And again, I always fight that stuff politically, including the tone of my voice as I say that and how I phrase it right now. But the fact is that I don't think those subsidies are going anywhere. And beyond that, I think First Solar has a business model here in the US that is going to be dominant. They've got the balance sheet to back themselves up. And I think Solar Edge has some technology that could revolutionize the solar cells, taking them from analog to digital. And um, and so the subsidies matter somewhat, but the reason I own solar energy stocks isn't for subsidies. It is because I believe that solar energy is the future. I think it's better than any other renewable energy that we've got right now. And I think the cost factors, partly because of companies like Solar Edge and for solar driving them down with technology, the costs of solar are going to drop. Oh, again, another factor of 10. I mean, solar will be a very big player in energy over the next 10 or 20 years. And I think these are two of the players that could drive that. So, good question. 43 minutes in, except I started 7 minutes after. So 36 minutes in. I'll take a couple more questions. I'm sure I got some more in the chat room. There's a question. Cody, I heard about a company, Energus Corp, that recently received federal approval from FCC in its wireless technology. Do you have any thoughts about this company? Yes, I've written about it in the last few weeks and several years ago, and I'm not a fan. Small cap that I don't trust at all. Looks awfully hypey, to be kind about it. Most small caps, micro caps that are publicly traded, pink sheets that issue a bunch of press releases but don't do much revenue. Be careful. Here's a question. Who's that poor guy? First of all, who's that poor guy whose face you're covering up in the broadcast picture on the app? And is he still a friend, or are you showing him the door? So if you go on the Cody Willard app and you see my user icon, it's me pointing, and there's a dude standing, and my hand is in front of his face. And I don't know why we use that image. I think I just tried. That was like the most recent image I had in my phone when I logged in the first time on these apps months ago. And I'll update it so it's a better picture. Second, real question. You were kind enough the other day to mention 3 possible puts that could serve as a hedge: IWM, SPYs, and triple Qs, and then in fact dipped into IWM and SPY. You had defined the triple Qs as tech heavier. Was there a reason you didn't include the triple Qs yesterday? Not really. No. I just started with the SPYs and the IWMs. I'm not in any rush to buy a whole bunch of puts. Not like I think the bubble blowing bull market that we've been riding for 7 years is over. And just catch your breath a little bit, buy some puts, put a little hedge on. I quote this all the time for Trading with Cody subscribers, and it's one of my favorite lessons that I've learned on Wall Street from one of my favorite old mentors on Wall Street. That is, his saying was always, may you lose money on all your hedges. Because theoretically, as Trading with Cody subscribers always hear from me, that should mean that the actual portfolio that you're hedging should be going up a whole bunch. And if you've done a good job of hedging, then your gains should outweigh the slight losses you have from the hedges. And then when things don't go right and your hedges do make a whole bunch of money, well, if it were easy, everybody, if it were easy, we'd all be billionaires, billionaire traders. Not just this guy. Another question I've asked before. I don't know if you have here, but anyways, since you are so high on Verizon, I guess high on the stock, not high on Verizon. I wonder if could be a strain of herb or something, right? that the right phrasing? I don't even know. But could be that. Anyway, since you are high on Verizon, as I am, why are you only mildly positive about buying their very long-term calls? You've said, quote, I can think of worse things to do. Why not do it or recommend it? Even though they've done well since another subscriber first asked you. Look, we don't always have to be greedy. And truly the reason why is this. Look, I would think over the next 3 to 5 years that Verizon goes up triple. Now, if I buy call options that expire in 3 or 4 years and the stock is only up 50%, I might lose everything on those call options because if you might have bought it $75 strike prices or something. Even if you bought them at $60 strike prices, let's say the stock goes up 20% and that's it over the next 5 years. Plus we get paid 5 or 6% dividend holding it the entire time, maybe 7% dividend in 5 years if it's still at $60 or something. So I'll be pocketing dividends and compounding my gains on those and hopefully getting another 20 or 30% from the stock in the worst case scenario there. Meanwhile, you've got 100% losses on those call options. That's why. There's risk, added risk, lots of added risk when you buy options. Any call options, any put options, selling them, trading them, butterfly spreads, Gilligan Island flips. Made that one up. There's always risks. I think that'd be sort of funny. You know what I might do? I might start writing about on like Market Watch, Wall Street Journal, TheStreet.com, talk about it on TV and hype this whole new concept, this technical analysis trick that I've learned called Gilligan Island flips that doesn't even exist. Just made it up with you guys right now. We're all on an inside joke. Not that funny of an inside joke, I guess. Guy adds now, yeah, Cody, but the Verizon calls are almost triple what they were if you bought them 2 to 3 months ago, even with the minimal rise in the equity to date. Well, thanks for the 2020 hindsight there, dude. Yeah, if you bought them at the bottom and the stock went up 30% quickly, well, yeah, you got a nice gain on them, but there's still risk. You could be rewarded handsomely. And let's say you bought those and the stock does triple. You could have tenfold gains on those call options. But I'm telling you, the risk reward scenario for me, it's not there for me. I mean, maybe you throw 0.1% of your capital at it, then it doesn't matter. But I wouldn't go crazy with call options. You've never seen me go crazy with call options. See me do some occasional stuff, but maybe this is the perfect scenario. I don't know. Wait till the stock takes a hit. Next time Verizon and the stock market gets hit, goes down to 45%, you go buy those call options, and then you watch. The stock won't move for 6 months. And then you'll be down 30% on them, and you're going to be like, I shouldn't have bought those call options. Meanwhile, we're even on our Verizon, and we got 2.5% dividend over those 6 months. Any last questions? Let's check emails here. Question for Cody. Crap. Another one. Okay. Cody, I have gone to this company that supplies Verizon. And this guy is asking, he's trying to understand what their software is providing. He doesn't really get it. So let's step back and look. 15, 17 years ago, 18 years ago, I worked at a tech incubator. And one of the things that we incubated was with Nortel, the telecom equipment supplier, was an investor in this incubator. And one of the things we were doing was building free space optical networks and designing fiber to the home networks. And even back then, there was this technology that was at that point somewhat burgeoning. That's called passive optical networks. And what it means, the word passive in there means that it's not driven by software. It's not driven by chips. It's much of what happens inside of the switches are literally driven by splitting lasers through prisms and things and getting more bandwidth and turning it into readable pulses of light in this passive optical network. And the way this, you need to picture this company's products is let's break down the telecom network a little bit. You've got the core, and that's where, the internet, sort of the cloud itself, right? I mean, you've got backhaul, you've got in Albuquerque or Dallas or New York City, all of those, even just old fashioned telephone calls and all of the internet live streaming and typing and anything you're doing gets funneled into these giant cores. And those things are fiber optic cables, that hundreds and thousands of strands of fiber optic cables that then have hundreds and thousands of different light wavelengths that are split to create even more capacity. And that's the core. That's not where this company is supplying. The companies that supply there are still like Lucent and Nortel, of course, but there's Sienna, Ericsson, lots of these companies, and that's the core. Okay, even Juniper and Cisco, and those their main routers. Those are in the core of the network. Juniper's routers are not necessarily in the core, but that's the next step here. Let's move to. Then you've got sort of the metro. Okay, it's called the metro optical network, a metro network, and that is from the buildings. You're taking those pipes, all of those calls, all of the connections, and putting them into pipes that connect the building to the cloud. So in the cities themselves, you've got smaller bundles of fiber optic cables that then also each strand of actual cable, each one of those tiny little hair size glass strands then can have thousands of different lights running through them too. And this is where this company homes, the company that we just bought on train with Cody last week, the smaller cap supplier to Verizon. That's where it plays. It plays in this metro area. So you're not going to see it as a customer. It's not the end. It's not like the end user. Then from the metro, you've got to the home. And that can be, in the case of 5G, it's just wireless. In the case of DSL, it's copper pair. In the case of coax cable, in the case of cable internet, it's coaxial cable. Different media, the different medium itself that carries the transmission can be different there, each in every place, frankly, but most of the metro, most of the core is all fiber optics. And that's the passive optical network, and those switches and the platform that drives the passive optical network in many ways are passive because they're not active. There's not a bunch of software driving them. Now, of course, there is a whole bunch of software driving them. Every platform, anything's got software and stuff driving it. So that, I hope that answers your question at least a little bit, and explains how the networks tie in. And where we play, we can own a service provider like Verizon, and Verizon, by the way, took fiber to the home. It's called Fios. That product is fiber optic cable taken to someone's actual home. You can have 3G, you can have LTE, which is 4G, on at least that's Verizon's version. There's different flavors of 4G and 5G. If you remember the words GSM versus LTE, and all of these are based on either CDMA or TDMA, code division multiplexing access. What's the A stand for in that? I don't remember. Have to look up what the A stands for in CDMA. But anyway, guys, I'm not just trying to show off, but I'm trying to underscore the fact that these networks are all tied in, and there's all these different platforms, and you've got distribution, you've got the equipment itself, you've got the people who supply the chips into the equipment, you've got the cell phone suppliers. It all runs in this ecosystem known as the internet and the cloud and the system. There's even a thing called SS7, which I've always thought was fascinating. When you dial someone's phone number, the first thing that has to happen is it has to be contacted and start ringing, even in a smartphone. So anyway, crazy stuff. I was a telecom guy for a while. I wrote the Telecom Connection newsletter, which many of my Trading with Cody subscribers today first subscribed to 15, 17 years ago. I still have Trading with Cody subscribers every year who talk about, Cody, I remember the Telecom Connection newsletter. So at any rate, now my brain hurts. See if there's any more questions in the email. I'm inviting fans to talk. The way the interactivity on this app works is you have to log into the app. At the top bars, at the top 3 bars on the top right of the app. I don't know where that'd be. And then come to the live stream. And then when I invite users to talk, hopefully it'll pop open and be like, hey, you've been invited. Be the first one to respond. And I don't know that it always works because Neil was live streaming on his app using the same thing the other night. And my wife and I were both watching, and she was logged in and I was logged in, and she only got the notification to time in once or twice, whereas I got it every time. Strange. Technology drives me bonkers. Never should have gotten this technology business. App business. Whew, doesn't look like I have any other questions in the email. No other questions. Any other questions on the call and or on the app? Last chance. Good. Oh, darn it. One last question. This one's good, though. Prediction on the Super Bowl. Is that this week? Just kidding. I got bad news for Philly fans. You know what I've decided? I shouldn't talk politics because all I do, I don't like Democrats or Republicans, right? Like I'm fighting that whole regime. And so all I do is make everybody mad because most people are Republican or Democrat. So what good is this? Just avoid the topic. Meanwhile, maybe this is the same thing. I know there's Philly fans, but I got bad news for you guys. I wouldn't just take I wouldn't just take Patriots. I mean, I think Patriots are going to run this game up. I mean, it could be 45-10. I'm thinking 49-6, 37-13. I say 24-point spread. 20. I'll take a 20-point spread, and that's still aggressive enough. I'll feel great about it if it turns out I'm right. Bet it. You want to know the best place to put $10,000 right now, Mike? Forget Verizon, forget Intel, forget Carl, it's the supplier to Verizon. It's the Patriots and Bitcoin. And that was a joke. I would not bet $10,000. Even if I was a billionaire, I would not bet $10,000 on a football game. There's better uses for it. Go give someone some money. Go help someone out. Go donate it to a Republican or Democrat. Not. Thanks, guys. Peace, love, and happiness. Fight the powers. Think free. What's the other words I always write? I'm beat. Good night.